Welcome to the channel, I'm James, and today we're looking at Royal Dutch Shell, ticker symbol Shell. We will be going through their financials that were released a few days ago, and then I'm going to be giving my fair value based on discounted free cash flow and the Buffett-Graham intrinsic value. Is this stock still a buy in 2022? I've been telling my channel to buy Shell for quite a long time. At the bottom of the pandemic, I said it was a buy in November, and then again in September, I said it was a buy, and the stock has gone up every single time and is consistently going up about 100% since the lows of November, which is when I purchased it, and the stock still has got a bit to go before it reaches its pre-pandemic highs. So let's have a look at the quick news updates. Oil major Shell reports sharp upswing in full-year profit, raises dividend and share buybacks. The British oil major posted adjusted earnings of 19 billion for the full year of 2021, and for the final quarter, it reported adjusted earnings of 6.4 billion. They also announced a massive 8.5 billion share buyback program for the first half of 2022. They're expected to increase their dividend to 4% to 25 cents a share for the first quarter. So that is very exciting for dividend investors. Let's have a quick look at my steps. Shell currently has a market cap of 152 billion, 3.65% dividend, and the dividend is the 17th of February and potentially going up to 4% as well. So buy your shares before then if you want the dividend. Is the P ratio less than the market? Yes. Shell has a P ratio of 10, which is much lower than the average, which is about 25. Next is the revenue increasing, and the revenue has actually gone from 388 billion to 261 billion. You can see here that this is the revenue from 2018, 388, 344, 180 in the pandemic year, and is now up to 261. So yes, it is decreasing from where it was in 2018, but up massively from 2020, which is an excellent sign. Now, if we go to the financials here, you can see that the revenue for the full year, these are the full years here, and then these are the quarters. You can see that compared to Q3, it is up from 60 billion to 85 billion. And if we compare it to this time last year, 43 billion, almost doubled in that time. And the full year, 261 billion versus 180. So revenue is up massively. We'll just have a look at the information from segment. This is the different ways that they get it: integrated gas, upstream, oil products, chemicals, and corporate. The largest part of the year, we'll just look at the yearlies here, is oil products with 182 billion, up from 128. Integrated gas up 52 billion to 33. Upstream 9 to 6.7. Chemicals is up, and corporate is actually down, but it's a very small amount. So revenue is trending the correct way. Next is the profit increasing, and once again, no, it's not 23.3 billion to 20, but the key thing is here, once again, 2018, 23 billion, 2019, it was down to 15.8, 2020, minus 21.6 billion, but now it is turned around, it is profitable, 20 billion, and still trending upwards, so it could be beating the 2018 numbers very soon. Yes, a fail as per the steps, but increasing. If we look at the financial statements, to get profit, we do revenue minus the total expenditures. And you can see here that almost everything is up. Depreciation and amortization is down massively, which is a good sign. But everything else is up, which is why the expenditure is 242 billion. And with the revenue of 261, that gives you a profit for the shareholders at 20 billion. So up massively from the previous year, as it was negative 20 billion. Please give a like on the video, it really helps me out, and give your thoughts on Shell down below in the comments. Now, we did hear that they were buying back their shares, and they've already done that, 1.656 billion to 1.5. So Shell are buying back their shares. We saw it in the news report that we just saw there, and you can see that they've been repurchasing. They have the Class A and Class B shares, and they have a massive buyback program. During the first quarter of 2021, 1.7 billion in share buybacks were completed. Share buybacks of 8.5 billion for the first half of 2022 were announced proceeds. So share buybacks are a massive part of Shell's plan. And finally, is the free cash flow increasing? No, it's gone from 30 billion to 26, but you know what I'm going to show you here. This is the free cash flow of Shell 2018, 19, 20, 30 billion, 19, 17, and is now at 26 billion. So up from the last year and growing in the right direction. It'll be soon higher than what it was in 2018, which is what we want to see. So let's go to the cash flow statements to see how the free cash flow is generated. And free cash flow is cash flow from operating activities minus capital expenditures. And if you look at the full year, cash flow from operating activities is up 34 billion to 45, and then this is minus capital expenditures. Capital expenditures are slightly up, 16.5 billion to 19, but you can see that that has then caused an increase of free cash flow. this would be about 17 billion, and now at 26. So free cash flow is up. So what does that give us? That gives us 2 passes and 3 failures. The failures being revenue, profit, and free cash flow. Yes, decreased from 2018, but up massively from 2020, and that's the point I'm trying to drive home across. It is going in the right direction. Free cash flow ratio is market cap divided by the free cash flow, 5.8, very, very low, even lower than the PE ratios. This is excellent. And is the dividend safe? Well, they pay about 5.4 billion in dividend. This is still going to increase to a bit more, but with 20 billion in free cash flow, this dividend is easily covered. So no worries there for investors. Now we're going to look at my discounted free cash flow models and then Buffer Graham intrinsic value. We have calculated the future free cash flows of Shell, and what you're going to see here, investors will like. According to discounted free cash flow, that actually has a stock price of $300 a share. I don't think Shell is getting to $300 a share, but it shows that it is still massively undervalued based on the free cash flow it's generating. Even these numbers here are a bit bearish, with 2022 being down, but it still shows that they're generating free cash flow. What I would like to look at more is the Buffer Graham intrinsic value, which takes earnings per share and expected growth rate. Earnings per share about 5.14. Expected growth rate over the next 5 years is 4.5%. That gives us a fair value of $90 a share, which is a 63% discount. So I'm going to say, look at this, still undervalued based on Buffer Graham intrinsic value. Now, if we look at the stock quickly, when was the last time it was at $80? Well, it wasn't, but in 2018, which was the numbers that we're about to reach, it was at $74 a share. So I still think it can get up to those amounts. It can definitely get up to the pre-pandemic amounts, which was $60 a share and even 65 in 2019. But I think it can reach even to all-time highs. So let's have a look at some of the technicals. This is a moving averages. We've got a 50-day in green, 100-day in yellow, and 200-day in red. What are we seeing here? We're seeing very bullish signs. The price is broken above all 3 of the major moving averages, which would be about 42, 45, and 46. So this is massively bullish. So what else do I like about this? Well, the 200-day has acted as a strong level of support. Once the stock hit the rise in November, which was the announcement of the vaccine, this has acted as a solid level of support, and I don't see it breaking below there. Next, we are going to look at MACD, and what is this telling us? Well, once again, that is very bullish signals. The MACD and signal lines crossed here at around about $42, which would have been your buy signal, and then again, it has crossed over and stayed over, and you can see they've gone from 0 to positive, which is other very bullish sign. So MACD, we're saying it's a buy. And we'll look at the relative strength indicator, which is currently on the daily level. You can see it is trending towards overbought. Last time on the dailies, it was overbought this much. It did have a drop off, dropped back and then shot back up again. But this is in overbought regions right now. If we look at the weeklies, that'll probably tell us a slightly better story. Not quite in the overbought regions of it was back in 2018. But you can see it is on the upper end, which is a little bit worrying. But I still think this stock is fundamentally solid. One thing I want to just quickly do is have a look at some previous lines of resistance and support. Obviously, this is the pre-pandemic price that we really care about $61. And this is the other previous high that we got to, which was 66. And the Shell has broke through 2 previous other levels of resistance, one at about $44 a share, and then this one, which was the key break, was the $50 a share. So you can see it broke above it, then dropped back down, but with the positive earnings, it broke through it again. So this is pretty unprecedented for where it's been. Shell has normally gone up and then consolidated for a bit before making a good move. If we hit this $61 a share and it does not have a strong level of resistance, I think this stock can then shoot up again. But as I've said, fundamentally the stock is solid. Good share buybacks, lots of free cash flow, and both of the models do say it's a buy. Right, guys, thanks for watching. Please give a like on the video if you've enjoyed it, and I'll catch you guys next time.